What's going on, everybody? Welcome out. This is 𝐘𝐨𝐮'𝐫𝐞, aka the Real Binary Master. I'm dropping this video, doing some analyzing on gold, and I just wanted to drop this video out to show you what I'm seeing. I was able to identify some chart patterns, as we can see here. We're looking at triangle formations. We have an ascending triangle pattern. We have a descending triangle pattern, and then we have our symmetric triangle patterns that price action can either break above or break below. So what I noticed when I was taking a look at gold, and we're going to take a look at it right here, is I seen gold was creating an ascending triangle, right? When we zoom out, we can see this a lot clearer. I'm going to highlight what I'm seeing. We can see that this here, excuse the non-straight line, but you get the drift, guys. You get the drift. We can see here that price action was staying well within this region. We had a ascending support line, right, where price action was staying above, found support here, and again here. And we know that, when we come up to 4 or 5 times of the market coming to the area of interest, that there's going to be a reaction or a potential break. And what we see here is we have our 3 touches. We have our 3 touches on the top of our resistance and our 3 touches at the bottom of our support. Now we come up here to our 4th touch. Let me delete this. We see our 4th touch occurring right here. Now, what happens following this is the important part, okay? We are recognizing that price action has successfully broken this resistance, okay? Price action has broken through this resistance, and we know that it was creating a chart pattern that is familiar as a chart technical pattern that traders can utilize to potentially understand where price action is going to go. Now, when we have a break of a triangle like this, we can anticipate that price action is going to move the direction of the break. So from the bottom of the trend channel to the top of the triangle channel is going to be our distance where price is going to potentially move to or move away from, okay? So knowing this is potentially our break, we have break of structure here. This is our anticipated target. Now, a couple things happened after price action broke out, okay? And this is where, as traders, we have to pay attention to it, okay? A lot is happening here, okay? We had successfully broken out of this pattern, this formation, this triangle pattern. And after the break of this critical area that we have marked up here, that we can see where price actions has respected numerous times, what happens after price successfully broke out and above? We had an immediate pullback. Price came back and retested the breakout area. You see that? Price broke out and retested the breakout area. This is the breakout area. This is price closing well above the breakout area on shorter time frames. This is a nice clean pullback. Then we start to see some type of wick rejection, followed by a bullish engulfing candle taking price up. Now, here's the second area of importance. Now that we have had a clean break above our resistance area, we notice that price actually retested and respected our breakout area. Price then goes on and creates a higher high on the shorter time frame. This is a higher high in price action. Now, it's up to us as traders to analyze the market and see everything possible, the bullish scenario, the bearish scenario, and then we have to adjust to it in anticipation of what's to come, right? So we have price respecting this area. We have price respecting this area going on, creating a higher high, comes back to an area of importance and pushes back up. Now this push back up here is where we really want to start to pay attention even more, right? Because what do we notice here? Yes, we got the clean break above our resistance zone, but is this a fake break? Or is this price action going to respect it and continue going up? So here we are. We're noticing that price has double top. Now, for those of you that have been around the industry or understand trading terms, a double top is a bearish formation, okay? Now, what makes the double top bearish is not the double top itself, it's the break of the bottom, okay? It's the break of that structure. So when we see this here, what does this look like? Now, this is a chart pattern that we're familiar with. It's called an M formation, a double top formation. So when you're analyzing these types of patterns, you're anticipating market direction or future market movement. Now, this only becomes bearish. This double top only becomes bearish if price breaks and closes beneath this area. And where would it come? It would go the distance of the M from the top to the bottom, which gives us a pullback to the potential trend line. So you ask yourself, is this a probability? Is this a possibility? Yes, it is. This could potentially happen and price still be bullish. Why? Because we've created the higher high and we're respecting these higher lows here. However, when we see a break of a strong resistance area, this now becomes our support area that we are paying attention to, ladies and gentlemen. So we obviously would not want to see price break back in. We want to see price start to reject this area and start pushing back up, right? Now, when we can, let's get rid of these lines that we just drew up. What can we see here? Remember, the double top is not bearish until it's broken. The bottom is broken. So as long as price action is staying above this area, we can anticipate we are going to head higher, okay? Now, for a bearish scenario, if price starts to close back within this region down here, right, where I have boxed up gray and red, if price, let me just get rid of that moving average lines real quick. So if price comes back here and starts to close back within this region and starts to break back in to an area that already price broke out of, we have to anticipate that is a fake potential breakout, and we are analyzing the market as so, right? So we're not going to want to be in a trade if price closes back down here. We're not going to want to buy it. We're not going to be in. We're not going to want to be in buys if the price action is staying. Is not staying above our area, and if price action starts to break back below, then that's our signal. Okay, we should not want to be in this trade. We should get out. And then we're asking ourselves, well, where's the next potential entry of or area of interest where we may want to take an entry? Now, what we can see here, let me get rid of some of these drawings for us. Okay, so what do we have here? We have a clean break above this area. So at that point, we're out of our buys, right? Now, knowing this, knowing that we have a support area here that price could pull down to, we're breaking the structure. We know the price is going to drop. So we could sell down to this area, okay? So let's, I'm going to go ahead and enter a trade real quick. We're going to be looking to sell gold right now. Okay. Now we're just anticipating a short-term drop. We're scalping gold. And our target area is going to be that of this area, okay? Our target area, right? Because price action is starting to pull back. We broke a structure that we're familiar with. We broke the M pattern. Now, knowing that we broke this pattern, go to the top to the bottom where we could potentially get the drop to. Okay. So here's the break. This is where price could potentially pull to. Now, does this area make sense? It makes perfect sense. We have a trend support here. So we're going to be paying attention to this area. When price pulls back to this region, we're going to want to see some things happen in this area within this region here. We're going to want to start seeing wick rejection, right? We're going to want to start seeing wick rejection. So that way, maybe we wait for wick rejection, then a 5-minute bullish engulfing candle. So that way we have confirmation that, okay, the market's completed this down push, and now we're going to be looking to take the market back up. At this point, it's very crucial that we just wait to see what the market's going to do next, okay? Our anticipation was the price broke this structure here, created a double top. This double top would be valid. Price would drop to our next support or a previous support. Well, in this area, we have a previous breakout area. At the same area, we have a trend support. So, ladies and gentlemen, knowing that we're potentially bullish, right, on a higher time frame, knowing that we broke out of this structure that was of importance, we have a bearish move in play. But overall, we're really truly looking to get this buy and buying it back up, okay? So this is what we're waiting for, okay? So now prices worked back into our region of area of interest. We're just going to close out our trade. For those of you guys that don't believe me, I'll show you guys real quick. I don't know if you guys can see that. No, you can't because it blurs out. Let's see. But anyway, guys, we're up $300. We caught a 10 pip move just like that. Scalping the market. Okay, we were able to capitalize on this down move that we were anticipating. Now let's see something. High to the bottom. Okay, so the wick came pretty close, but I'm anticipating one more push to the downside. I do believe that price will wick this area and we could look to take it back up. So I'm gonna stay on here with you till this trade plays out, guys. We have taken 50% partials on a 10 pip. Our sell is at break even. So no matter what, we secured the bag, ladies and gentlemen. Now, the cool thing about this is when price broke out and we waited for the pullback here to get the retest, we actually capitalized on a 30 pip move, right? As you can see here, price pushed up 301 pipettes, which is 30 pips. So on a one standard lot size, that's $300, right? So we just potentially made $300 in a move of 15 minutes, 3 candles, right? Our entry, 3 candles later, we're looking to take profit. Now, again, as you're in a trade, you always want to be aware of the bearish scenario and then the bullish scenario, right? So we were able to capitalize on bearish movement, but overall we're in a buy, right? So we're in a buy. We're anticipating market to move up. We just capitalized on a sell down because that's what the market gave to us. Overall, we believe based off of this breakout that price will pull back up. Now, we are not in a buy any longer. We are anticipating price to push back up. It hit us at break even. We are, our trade moved into plus 30. We moved our entry to break even. We took partial profits at 50% of our trade or whatever. So we secured the bag at 30 pips, hit us out at break even. Then we capitalized on the sell for a 10 pip scalp, which could have paid you more than the 30 pips in general, depending on your lot size, your risk, and how you trade. But we're not done with this move, right? We still can anticipate price to pull down another, 20 pips. Now, if price pulls down to another 20 pips, and at this area we start to see some type of rejection or bullish confirmation, where we see, back-to-back dojis followed by an engulfing candle, or something of that sort, where we can see that, the market's starting to reverse, that's when we will look to re-enter our buys and then exit our sells. So my anticipation of this market move is we will see price pull back to this region. And from this region here, I'm anticipating price to pull up. But if price does break, where are we going, right? If price does continue to go down, where are our areas of potential profit? So we have this area here as potential profit, and then we have this area here as also an area of potential profit. Okay. So this would be from this move here, this would be our TP1, TP2, and TP3. If price, okay, this is where you want to compound your trades or stack your trades. I say stack your trades. You want to stack entries. So if we get the price to break below here and we start seeing confirmation, okay, that we're going to be bearish, well, you're going to want to take this whole move down so you can add additional entry to take this trade down. Okay. Now we have this trade here. We secure partials, 50% profits, whatever it may be, whatever your trading plan is that you follow it. Okay. For me, I'm closing 50% profit here. And if we get price action to close beneath this area, well, guess what? That's telling me that we're going to continue to stay bearish and we could potentially take the market down even lower. And that's where we get our final target potentially, where price may push down to here. So now we have 3 entries. We have this original entry running maybe 0.25% of the entry left open because we've secured partials twice now. And then we have our second entry where we're securing partials here. And then we would have our third entry where we're going to take all of our profits when a target reaches our third and final take profit, which comes in at, this 1825, 1826 area. So we are anticipating price movement live. This is live charting. This is live analysis. As the market is moving, we are deciding what is our best decision here to make money? What can we do to be profitable on this session, on this setup? And I've just shared it with you. If we broke this double top formation, we weren't looking for the top rejection. We were looking for the break of the bottom. We take it down. We take it down the distance of the M, which is exactly going to bring us to our uptrend support. Again, ladies and gentlemen, I don't believe in coincidence. When there's trading, there's a reason why there's an area of influence there. If price comes there, I'm going to execute. I'm going to take majority of my trade, and then I'll leave percentage of that running in case price action does continue to drop. But again, we are anticipating that price pulls down here, and that's it. That's the lowest it's going to go. And why do we anticipate this? Because if this area here is our previous low, and this area here now becomes our previous low, then we can anticipate that if this area is higher than this low here, price has created a higher high than this high here. We can anticipate we've created higher highs, we've created higher lows. If we are anticipating we're staying in this uptrend, we have to find our next potential area of higher low. And this area makes a lot of sense for it to become our higher low. Again, we have a previous breakout area right here that we can see resistance, resistance, broke. We also have a significant uptrend support line, right? We have a primary uptrend here forming. And this is where our take profit, majority of our take profit is going to come in to play. And also, we're going to look to buy at this area if we have enough confirmation, ladies and gentlemen. So let's just get an update on our trade. We executed the trade exactly at 12 o'clock. I've been on around 10 minutes with you guys. And so far, I've secured $105 profit. And my trade is currently up $230, ladies and gentlemen. I just made $300 making this video for y'all, because I decided to take action, guys. You don't understand, when you take action, you don't know where you're going to make money from. It just occurs. The universe rewards you, right? I wasn't coming on here thinking I'm going to catch a bag trading. I just wanted to share with you guys my analysis of the setup. But as I was sharing with you my bullish outcome, I realized, hey, we have a potential here to capitalize on this downward move. And I hope you guys are able to see that, right? Our overall stance on gold was bullish, but we took advantage of that bearish move. We took advantage of that bearish drop. Why? Because we recognized what was occurring and we adapted to the change, right? So that's my style of trading. I'm looking for the best setups. You know, I'm looking to get in and out of the market with the bag. I'm more of a scalper, intraday trader. But ladies and gentlemen, when you can secure the bag, that's all that matters, okay? Just secured more profits. The trade is still running in profit. We're up over 20 pips on a scalp trade, which is incredible. And here we are. Price is actually coming close to our area. So now is where we're going to start want to see, hey, are we wick rejecting this area? Do we start to see potential bullish confirmations on the shorter time frame? So if we're looking on the 5 minute, let's go to the 1 minute, 3 minute. Do we see dojis? Do we see engulfing candles? What do we see? Well, price came right in our area and we had a wick rejection. Okay, that's good. So let's see if price comes back in this area and we start rejecting again, because we do have a little room to drop before we're really at that bottom. So let's see. You know, it's only 0.7 of a pip, but again, we're looking for some type of rejection here or some type of wick rejection within this region. And it looks like that's exactly what's occurring. So we're going to go ahead and wait for this price to pull down here to our area and then secure the bag. But if we get that wick rejection like we just did again for the second time, we can start to anticipate that, hey, maybe, just maybe, our analysis is correct on the setup. We did get to sell down, but now we're looking for that bullish rejection back up. So once we get a couple additional confirmations here, I'm going to look to re-enter this market for a buy. And we're talking a very scalping buy, like a sniper buy. Let's just take a look, guys. So this trade's gone. The buy is gone, right? Okay, so here we are. We got wick rejection, and now we're starting to get bullish engulfing candles. If you guys rewind this video, you heard what I said. We're looking for a wick rejection followed by some engulfing candles or bullish confirmation. So we get in, right? We missed our perfect ideal entry, but hey, it's going to happen. If we would have got in right at this area, ladies and gentlemen, it's... With that note, guys, I'm out. I missed my buy back up. I'll have to wait for a pullback. But anyways, ladies and gentlemen, this is the power of what we do. This is the power of just plugging in, showing up, checking out. You know, you might not be ready to get live trading started right now in the markets, but what you can do is you can take all this information, knowledge, and value that I'm giving you guys and my partners are giving you guys and implement it in the future, right? This is all knowledge that you can be stacking. Note takers and money makers, right? You could be stacking on paper and taking mental notes and learning, guys, because I promise you one thing, this industry will change your life. It can change your life. It's not going to be a get rich quick scheme. We're not going to get rich overnight, but I promise you through the process, one night you will get rich. I promise you that if you don't give up and quit on yourselves, that you will have your breakthrough. I promise you that if you give yourself the time it takes to grow into an independent, profitable trader, if you allow the skill set to match up, right? If you allow the skill set and you put in the time and then you start, you guys, it's just like a domino effect, right? You show up, you put in the time, you absorb the information, the education, then you start to implement it. And what you start to see is, wow, you can do this too. You can do this too. And if I can do this, trust me, ladies and gentlemen, anybody can do this. And I don't take that lightly. So with that said, I appreciate you all. Hopefully you guys got some value of this quick little informative video on how we're taking the gold setup. But again, appreciate you guys, and we will see you guys in the next video. Don't forget, I will be dropping content like crazy. The goal here is to get everybody paid in 2023 and beyond. Bye for now.